Top 5 things you should know about the Turn Americans into Renters plan. Explained like you're 8-1. A 50-year mortgage is like paying for a toy. Your whole childhood. Imagine buying a bike at age 8, but you don't finish paying for it until you're 58. That's what a 50-year mortgage is. The payments are smaller, but the debt lasts almost forever. Banks make more money because you pay interest for double the time, and you barely make a dent in the loan for decades. Translation: you're paying, but you're not owning much. It feels like buying, but it behaves like renting. 2, this didn't come out of nowhere. It started with the Great Depression. Back in the early 1900s, mortgages were like a pay interest now, huge surprise bill later trap. People paid interest only for years, then had one giant balloon payment. And during the Great Depression, millions lost their homes overnight. So the government created Fannie Mae. These made mortgages safer, and the 30-year mortgage became the standard. But now they're trying to stretch it to 50 years. Why? So homes feel affordable again without fixing the real problem. 3, longer loans don't make homes cheaper, they make debt longer. A 50-year mortgage is like, here's a cheaper monthly payment, but you're stuck paying for a long time, kind of like getting a phone plan with tiny monthly payments, but you're locked in until your kids graduate. It helps people afford homes on paper, but it does not lower home prices, and you end up paying way more over time. This benefits banks, investors, builders, not homeowners. 4, the hidden plan. Keep you paying, not owning. Think of a 50-year mortgage like a never-ending treadmill. You're moving, you're sweating, but you're not really going anywhere. Why this matters: your equity grows slowly. You stay in debt most of your adult life. It becomes harder to ever fully own your home. Retirement becomes riskier. You stay dependent on banks or landlords. It's the perfect setup if the goal is to turn more people into lifetime payers instead of homeowners. 5, what you should know. Here's the plain English truth. A 50-year mortgage might help you get in the door, but it keeps you in debt almost forever. Think of it like buying a car with payments so tiny you barely feel them, but the car is old, rusty, and paid off when you're a grandparent. What you should do: focus on earning more, not stretching loans. Learn tax strategy to buy smarter. Don't fall for lower monthly payments. Build equity faster. Use creative financing, not long chains. A 50-year mortgage makes housing look affordable, but it can turn homeownership into a never-ending bill, and that's exactly how renters are made. When you know better, you build better. Let's build together.